Dariusz, great to have you with us as always. I'm interested to talk to you about your forecast for GDP growth in Japan. We know it has turned positive in Q2. You do expect it to remain positive despite these headwinds that the economy there is facing.
The Japanese economy is bound to continue to expand because decline in the unemployment rate is allowing consumption to continue growing. And at the same time, I expect that as capacity utilization is increasing in line with demand for exports, Japanese businesses will begin to gradually but still increase their fixed asset investments. At the same time, trade surplus continues to widen. So all stars are aligned to allow for an acceleration in GDP growth in the first half of this year. And we are forecasting 0.9 Q-on-Q in the first quarter, 1% in the second quarter. So as is the case for the rest of the world, Japan is also accelerating at this time. And to my mind, this is one of the reasons why the recent drop in investment in risk appetite is going to be only temporary, and we are going to see another round of rally in global equity and commodity markets.
How concerned are you, Dariusz, about the outstanding loans falling around 1.5% in January? Now, we know this is coming from quite a high base, so you would expect some form of a softening, but does this not show quite a low interest from companies in terms of inputting more capital expenditure into businesses and growing that way?
Obviously, a negative growth rate for loans is a sign that we should not expect a huge jump in fixed asset investments. But as you pointed out, there is the issue of base effect here. Capital markets were pretty much closed a year ago, so businesses had to turn to banks for lending. But right now, capital markets in Japan have become open enough for companies to be able to raise funding there. So I don't think that this data implies continued decline in capital spending. It just means that fixed asset investments will not grow very fast.
Now, Dariusz, in terms of the inflation situation in Japan, I noticed from your notes that you're looking for CPI to be down around about 1.1% this year on average and 0.4% next year, of course, on average. We know also that the BOJ, the government is calling for the BOJ to do more, largely in concerns about falling prices and, of course, the strong yen. How much more do you believe that the BOJ is, in fact, likely to do?
I think that they are not going to do a lot, primarily because of their extremely cautious stance and their rigid academic beliefs that monetary policy is unable to do much to counter deflation. But the reality is different. Look what happened in the US, where very aggressive monetary easing, quantitative easing, allowed the economy to avert the risk of deflation. Japan could do significantly more, but unfortunately the central bankers there are unwilling or unable to carry out the necessary measures. I think that they expand quantitative easing a little bit just to show that they are doing something, but unfortunately for Japan, they are not going to do much, and this will prevent any meaningful weakening of the yen, which would be a precondition for even faster economic growth and an ultimate victory over deflation.
Where do you believe that the yen's going to go to, Dariusz, by the end of the year?
By the end of the year, it will be very close to current levels, slightly weaker. Our forecast calls for 90. But in the short term, it's likely to weaken more substantially. We expect 94 by the end of Q1, because I believe that risk appetite will briefly return to global markets in the short term, and this will trigger an increase in the carry trade over the period of later in February, March, possibly early April, weighing on the yen.
Dariusz, we've only got about 20 seconds here, but I see that you do have a forecast out for the topics. Where's that market headed?
We think that it's going to go down. There will be an even more steep correction in global equity markets in the second half of this year, and topics will end 2010 at 825, about 8% below current levels.
All right. Dariusz, wonderful to have you with us today. Thank you so much for joining us. Dariusz Kowalczyk there from SJS Markets. Indonesia's benchmark Jakarta Composite kicks off trade in about 3 minutes from now. We'll bring you the opening numbers up next.